Hello and welcome back to The Note, coming to you from London this week, which is appropriate because things on this side of the Atlantic have just got very much more exciting. As you no doubt already know, banks in Greece are shut for the week as the country prepares for a referendum on whether to accept the bailout terms on offer from the rest of the Eurozone. A Greek exit from the Euro, a Grexit, has never looked more likely. And yet the response so far on the markets has been remarkably muted. Bond spreads are wider, but they remain below their highs even for this year. Stocks are down, but again, still up comfortably for the year. And the euro remains at about $1.11. What is going on? Why is contagion contained? With me now to discuss this is the head of Forex strategy at Rabobank, Jane Foley. Jane, thanks very much for joining me on a busy day.
Thank you.
Let's start by taking a look at the fundamentals and why there might be more support for the euro than we might expect. Take me through what's been going on with the current account.
Well,
deficit.
This is a map of various countries' current accounts, and as we see, the euro area current account is really quite substantial, and it has been rising, it has been trending higher in recent years, and this might go to explain why the euro in particular has been quite resilient in recent weeks, despite the Greek saga. Now, often, as we see in times of crisis, money comes home. It comes home to current account surplus areas. A current account surplus area just been a surplus of savers, if you like. Money comes home. Now, this really has been verified as, for instance, we've seen bund yields push lower as money comes back into bund yields. So it seems that at the start of QE from the ECB at the start of the year, very possible that the push down in yields in the Eurozone pushed investors into seeking higher yields elsewhere outside of the Eurozone. And now it seems that many of those investors have come home, and that has added support to the euro. Okay,
for the euro as a whole, obviously money is not coming home to Greece at the moment. Greece is a tiny proportion of the Eurozone. Now, if we take a look, we'll expand a little more on yields. We can see here, if we take a look at spreads of bunds over treasuries, remarkable events sparking ahead of the launch of QE. And since then, if anything, we've had the kind of shift in that spread between bunds and treasuries, which again would support the euro.
Well, again, there's been over the last few months, really since February, the start of this German reflationary story. Bidding yields a little bit higher in bunds. Now that adds a new dynamic to the euro, because if quantitative easing was forcing investors overseas to seek higher yields, perhaps they no longer have to do that. So how German yields pan out this year, I think is going to be really crucial for the outlook for the euro. But even if bund yields do move around because of Greece, well, the fact is that if they are higher than they were in January, the euro will find some support.
Okay. We've got some grasp then for why the euro hasn't been weaker than many might have thought. We still have the situation where we might have an unprecedented exit from the Eurozone happening within scarcely a matter of days at this point. We have a referendum coming up. How can people really be that calm? Are they doing political analysis? Why the degree of confidence?
Well, it does seem quite surprising, I must admit. Even despite the explanations that I provided for the resilience of the euro, you would perhaps expect a little bit more panic. Now, certainly today, we can't really see the panic. As you suggested, the movements, whilst they're chunky in peripheral bond yields, they don't say there's panic. And neither do the flow. The flows are still relatively thin. So we do have to ask ourselves if the market has underestimated the impact, because after all, this is an unprecedented event. If Greece does come out of the euro, or if the Greek central bank is forced to print a new currency just so that people can carry on with their transactions in the force of capital controls, well, maybe we do have this situation where there's more of a question mark over the whole coherence of EMU. If that happens, well, yes, I think there would be more capital flight from the Eurozone. But just now, it seems that the market doesn't believe that a Greek exit can really break down the rest of the euro system.
Okay, so in many ways there is a bet that the centre will hold, that the Troika, or whatever we call them these days, have done enough.
It certainly appears, and you could say that the structural reforms done by the periphery in recent years have acted as firewalls against the worst of contagion.
Now, can I ask one final question, which is the critical scenario analysis? We do have this referendum coming up. I think from the people I've spoken to so far, there is the belief that either Tsipras loses it, or he gives up and cancels the referendum, or he wins. And only in the scenario that he wins, which people think is currently unlikely, does the worst come to the worst as far as the euro. Would you agree with that scenario? Do you think people are taking that too far?
Well, that's the way it seems now. Tsipras, of course, is campaigning for a no vote, and a no vote would increase the likelihood, of course, that Greece comes out of the euro. Now, that is not the scenario that the market is pricing for now, because opinion polls are suggesting right now that the people would vote for yes. And again, that's perhaps another reason why there's relative calm in the markets today compared with what you might expect. But if there is a no vote, if Tsipras wins and the people decide that they perhaps move out of the Eurozone, or at least that's forced upon them, well, again, it's very difficult to know how the euro would behave, but surely there would be some capital flight out of the Eurozone into alternative assets.
Okay, Jane, thank you very much indeed. I think that's about as clear a synopsis as we can give you of a very confusing situation for now. There are good reasons why contagion is contained for now. Plainly, a few opinion polls suggesting that a no vote was going to win in Greece might change things a bit.